Let's move on and dissect some of the earnings which already came by. CEAT Limited, we have the CFO with us, Kumar Subbiah, joining in on the show right now. Kumar, hi, good morning. I'm just looking at your Q3 performance. Just wanted to understand, given that you had guided for a 4% price hike in the third quarter, what's been the RM costs as well as the price hikes that you undertook in the third quarter?
Our raw material increase was in line with your forecast. Approximately, it went up by about 4% in quarter three. And in case of price increase, approximately about 2.5% was a kind of price increase we took in quarter three. And over different points in time, largely in the month of November is when this increase happened. And mix was a little adverse. So the net realization went up by about 1.8% in quarter three. So lower than what we wanted to do in quarter three.
So are you hinting towards further price hikes then?
Our current plan is to take another couple of percent price increase in the coming months in the replacement market. We are able to take our prices up in the OEMs in line with our formula linked to increase in input costs. Exports, we have been generally able to increase the prices with a 3 months kind of a lag. So replacement approximately 2% is what we intend to do in the immediate future.
Okay, so perhaps a price hike then on the anvil is what you're indicating at. Wanted to also understand, we've been talking quite in detail about the impact of the raw material basket. Going ahead, how do you see that impacting your overall figures, and when are you expecting a normalization?
See, the inflation on raw material prices has been moderating. We still expect raw material costs to move up by about 1.5% in quarter four over quarter three. And after that, we expect it to remain stable. That is our expectation based on prevailing market conditions and our own understanding of the market. So there is a lag with respect to our price increase vis-a-vis our raw material increases. We hope in the coming months and quarters we are able to bridge the gap. We expect raw material costs to remain stable beyond quarter four based on current market conditions.
Okay. And can you give us a sense as to what exactly is the mix between replacement, OEMs and export sales, and what is going to be the company's key focus area? Any sort of a guidance that you have in terms of 2022?
In the current year so far, exports has shown a strong growth. For example, in quarter three, we grew by about 8% over quarter two. And year-on-year growth was about 45% or so. The share of exports business on overall has moved up from about 12-13% to around 18-19% level. So it's going to be an important area of focus for us. And within that exports, we are also focusing on OST business, which is growing. And currently we are utilizing its capacity fully, and there is a plan to increase that capacity in the coming quarter, end of next quarter or beginning of quarter two. The capacity of OST would increase, and in 12 months' time, there's going to be another increase in OST capacity. So certainly an area of focus. On other categories, passenger in general, both passenger car, radial, as well as two-wheelers, continue to be a part of our core, and we'll continue to focus on it. As we speak now, we have enough capacities to grow, and we would like to leverage these capacities in the coming months and quarters to grow in these core categories.
Good morning, Mr. Guha. This is Nayantara checking in. We've talked about raw material prices, exports, this, that, and the other. Now, for the next big disruption for Motown is, of course, considered to be electric vehicles. We learned recently, thanks to CEAT in our last interview, that, for example, the tires for EVs have to be heavier. So, it's different kind of tires. Can you give us a sense of what's happening on ground, the kind of orders that are there, whether, it's for two-wheelers, three-wheelers, buses, commercial vehicles. Give us a sense of what's happening with EV because you're going to play such an important role in that.
Okay, our own assessment, electric vehicle penetration will happen in the initially more in two-wheelers, three-wheelers, then passenger car, and later on commercial vehicles. That is a sequence in which we expect the scale up to happen. And we are engaging with all the OEM, original equipment manufacturers producing electric vehicles very closely. As we speak, our share of business with as far as electric vehicles is concerned on two-wheelers is certainly higher than the share that we enjoy in the non-electric vehicles part of two-wheeler business. And even on passenger cars, we are engaging with OEMs. As you also rightly mentioned, the vehicle would be EV vehicle is expected to be a little heavier than the non-EV vehicles, but because of the batteries, and therefore the tires will have to withstand that weight, one. And number two, and the noise levels of tires will also have to come down. So therefore, there is something called as rolling resistance that we need to continuously work on to make progress in getting our tires approved with electric vehicle manufacturers and maintain certain amount of share. So we are constantly working with respect to developing those products, meeting the specifications of original equipment manufacturers. But we are still talking about a very low base, small base. Okay, so the impact of electric vehicle fitted tires on our revenue would still be small, even in the next year. But it could be a growth engine for us. If we manage it well, I'm sure we should be able to gain certain share in the categories where electric vehicle penetration is going to increase in the coming years.
You know, EVs, for them to take off, will also have to be priced competitively. The entry point, Mr. Guha, is going to have to be very attractive. We usually talk about, you know, the battery being the most expensive component and all of that. Can you give us a sense about tires? How much more expensive would a tire for a two-wheeler EV be versus an ICE, and similarly for four-wheeler?
As of now, in case of two-wheelers, the technology to produce these tires remain the same, even for passenger car also. So, we don't expect the weight of the tires that will be fitted in electric vehicles to be very different from the weight of tires that that are used by the non-electric vehicles. And therefore, in terms of price per tire, is unlikely to be very different from the price of tires that we sell in the marketplace today. So it may not make much of a difference. Only difference could be that the specification of the product could be different in case of two-wheelers. In passenger car vehicles also, our initial understanding is the same. But if it warrants increase in the weight of the tires, obviously the price per tire could change in case of passenger vehicles. But it is still early days in terms of predicting what the prices would be for passenger vehicles. And we don't expect, in general, I think, to a response to your question, we don't expect the prices of tires to be very different in case of electric vehicle fitted tires.
So let's leave it at that, Mr. Guha. It's been great talking to you to get a sense of what's really happening, at the company, the earnings that have been announced, and of course the larger picture with everybody now waiting and wanting to know updates as far as electric vehicles go.